chairs are just sitting on right now.
Hello, everyone, and welcome to One Chair. None of what you will hear is financial advice, and this podcast is for educational and entertainment purposes only.
Hey, everyone. So in this episode, we have lots to talk about. We have the preferred shares of MSTR that are performing very well. We have S&P 500 inclusion criteria met for MSTR. We will also be talking about differentiation between ETFs and Bitcoin Treasury companies and their different risks. So, Quentin, let's get started.
Okay, so the news of this week on the strategies front is twofold. As you mentioned, we have one, the eligibility for S&P 500 inclusion, and the second is the preferred shares that had quite some movement at the end of the quarter. It was the day that the dividends were paid for the quarter. As a reminder, for all of the preferred shares, you have certain dividends on them and they're paid out quarterly. And this payment was made now for quarter two. It's the first time those dividend payments are made, and there's a few interesting things about them. One is, how did Strategy pay for those dividends? What they did is hit the ATM of the common stock for the last week of June, and they were able to make $500 million in proceeds from 1 week of ATM. The stock during that time was up 6% for the week, so it didn't really have a negative impact on price. And they used around 10% of that to pay the dividends. Around 50 million was used for the dividends, and the other 450 million, they bought a Bitcoin with it.
Yeah, you can see we prepared a little visualization that we got from X, where you can see the different yields for the different preferred equities. As Quentin mentioned, the dividends were paid for STRF and STRK. And that's interesting to see that the yield for both of these preferred equities drops massively on basically in 1 day. The reason exactly is probably that a lot of the people that hold those preferred equities, when they receive the dividend, they just roll them back into buying more of these preferred equities, right? So STRF and STRK are being repriced. And I find it fascinating to see it, because even Jeff Walton, who is the guru of MSTR, was caught by surprise on this and thinking about it. Yeah, it gives an additional power to MSTR or to Strategy to accumulate even more Bitcoin, because obviously as there's those price actions that happen on these preferred equities, that means they can hit the ATM slightly harder. Obviously, they're still building liquidity on those preferred equities, but looking at this and looking also at the price action of MSTR on June 30th, I wouldn't be surprised if they already hit their 600,000 Bitcoin mark. I don't know your thoughts on this one, Quentin.
Yeah, we'll find out next Monday how much they were able to buy, and it will be interesting, especially to see how much ATM they were able to use on STRF and STRK specifically. For now, the weekly proceeds were around 50 million on both those instruments. So if it's significantly higher, we will know that they were able to take advantage of that. Maybe just an additional explanation on those curves. The yield is coming down massively, which basically means that the underlying stock price is going up, right? So Strife is now trading at around 115 and Strike at 120. So it was a massive jump in the price of those instruments in 1 day. Probably, as you mentioned, due to the fact that the ones that are receiving the dividends just rolled it back into those stocks for more of it. And this allows Strategy to issue more of those shares into it. And in that way, the dividend payments that they made, part of it, they are able to directly retake in by issuing additional shares and buying Bitcoin with it, which is also an interesting thing.
Yeah, I think it's a new concept, right? That, as mentioned, caught most of us off guard. Another aspect, obviously, is STRD. Right now, there's still no ATM on it, but probably there's going to be one coming out in the coming weeks. I suspect that when the next dividend date comes, STRD will probably have a similar performance as STRF and STRK did on June 30th.
This is all speculation on why the price action is like that, right? There could be multiple explanations for it. One is that the dividends were reinvested. The other could be that the market is waking up to the fact that those dividends are actually getting paid and that they're quite high. A third explanation would be that it's just because of the value of Strategy going up on the same day because of the eligibility for the S&P 500 inclusion. Maybe that played a role as well in also repricing those preferreds. So we don't know. It will be interesting to see in the next quarters how the price action evolves after dividend payments.
And maybe another thing to mention here is that on June 30th, also there was the announcement that Strategy got included in the Russell 200 top value index. So it's a rather small inflow that should come, but it's still an inflow. And I think that's just repricing a little bit more Strategy overall, right? So there was a culmination of good news and events that probably made all of these price actions happen on the same day. So that was really interesting to see.
And it looks like more and more that those preferred instruments will be the way Strategy will accumulate Bitcoin going into the future, looking at the ease that they have to pay those dividends, that some of those dividends probably flows right back into Bitcoin as they're reinvested into the preferreds. And again, they hit the ATM for a week, 10% of it they use to repay the dividends. So they have no problem doing that.
Yeah, no, that completely makes sense. Also, I believe that converts are less accretive than the preferreds, right? So that's something that they'll probably stop using or use at really opportune times. So yeah, Strategy is already on the next level here compared to other companies that are trying to follow the playbook. Yeah, I'm really looking forward to see how they play this one out, because I think we're not ready for this, even us who have been looking at the strategy or the playbook. It still feels like it's not really priced in, right? So
and this evolution, let's see how it continues over the next weeks and months. But if we get really price appreciations on those preferreds and more volumes behind it, this will be super bullish for Bitcoin and for Strategy, because if they are able to hit the ATM harder on those, it will really increase their Bitcoin accumulation at a low risk for them.
That's why I'm super curious already to be on Monday and see what their issuance was this week, because I suspect that on Monday, on June 30th, the gears were turning full throttle for sure.
And it does seem, again, this is speculation, but if you look at those instruments and the people that would be investing in those, it's fixed income market participants. So they buy those instruments for the yield. So I don't really see a lot of people selling those instruments. Now, we had a super strong day on Monday now with those preferreds really appreciating in price. But this should allow Strategy to really issue more of those shares, and the price would not necessarily fall massively because the people already holding those shares are not selling into strength. They want to keep those instruments for the yield that they're getting from it, right? So it's not really a speculative asset that you sell on every 10% jump.
No, that's correct. I think the pressure is going to build more upwards than downwards, at least for the time being. You can see that there hasn't been any selling pressure on these instruments. And as the market wakes up to these instruments, there's going to be even more need. So they're going to be able to keep hitting the ATM harder and harder, in my opinion. But again, as you mentioned, this is speculation, but I think we can kind of see it a little bit in what's going on already with the repricing of those instruments as of Monday.
Okay, should we move to the next topic, also on Strategy, with the S&P 500 inclusion qualification. Important to note that it's not clear that they will be included in the S&P 500, but now at least they're eligible to be included.
Yeah, absolutely. So we prepared a slide here with the S&P 500 inclusion criteria. So the last criteria that the strategy was missing was having the last 4 quarters, aggregated quarters, being positive in earnings. And they're going to hit that based on the Bitcoin price that ended on June 30th at about 107,000 US dollars. And that gives them approximately 5,900,000,000 in earnings as of end of Q2 2025.
Maybe to add on that, so that it gives them for the last 4 quarters aggregated, it gives them a positive of almost 6 billion. But for Q2 specifically, they had actually a quarterly gain of 14 billion. It's 11 billion after tax, but the Bitcoin gain that they had in Q2 is 14 billion overall, which translate into earnings per share of $40.
Exactly. And what's funny is, I don't know if you saw this, the estimate is a loss of 7 cents per share. Yeah. So we might see a repeat of Q1 where the estimates were missed by 85,000%. So I'm really looking forward to see that as well now.
Yeah, I think they had negative $12 of EPS in Q1, and now they would have a positive of $40.
So yeah, the market is probably still not ready for this. We'll see when their quarterly earnings call will be, but I'm really curious to look at what the TradFi participants come up with.
Yes, and that will be interesting to see, because this company is special. We have full transparency basically on what their earnings will be. I mean, within a 5 to 10% range, I would say. And this is different than most bigger publicly traded companies where you really have to wait for their earnings reports and earnings call to get this information. Now we know on the day of the quarterly close how their numbers will be for the quarter, right? And it will be interesting to see if the stock moves at all when the earnings report comes out. Is this a surprise to anyone? It shouldn't be, because if you follow it correctly, you know today what their earnings will be. And if the stock moves heavily up or down upon our earnings, it means that just the market is not really understanding strategy yet.
So we'll see what happens, but I suspect that it shouldn't move because, as you mentioned, everything's so transparent. Regardless, they're still having those estimates, so who knows, right? I mean, I did see a headline from Bloomberg earlier saying that they do acknowledge the 14 billion gain, right? So at least there are some news outlets that are on top of this. But regardless, the estimates suggest something different. So yeah, curious to see also what happens on the price action there.
We should know that in August, probably, when the earnings report comes out. But in the meantime, let's talk about the potential S&P 500 inclusion. So what happens next? So now they're eligible for it. There's the S&P Dow Jones US Index Committee that actually takes the decision on which companies to include in the S&P 500. And they ask a bunch of questions on those companies that are eligible. For example, are those companies stable? What is their risk? Do they represent the US market fairly? Does the business model fit? And there are some question marks, right? If they will allow strategy to be included, especially looking at things like stability or volatility is the better word here, because it is a very volatile stock. So this might hold them back here and might make them rethink the inclusion of strategy. What are your thoughts?
Yeah, no, absolutely. I think that's my fear is that the committee will probably look at the volatility and be reluctant to add them to the index because of it. That being said, there's been accumulation, right? So the stock hasn't been so volatile in the last few months. So we've seen a period of lower volatility. So maybe that actually is a positive for strategy to get into the index. even though a lot of people have been complaining that it's not volatile enough. But who knows, maybe that comes to be a good thing for this specific purpose. Another thing that I thought is interesting, and maybe you know this a little bit better, is with Tesla, right? They also took a little bit of time to include them into S&P 500 index. And I don't know, maybe there you can share some insights, what happened.
Yeah, it took a while to have them included. It was one of the biggest companies by market cap to finally be included. And that's why they had massive passive inflows then when they were finally included. And that made the stock price rally around 700% after the inclusion. So you can see that those flows really make a difference. I'm not sure why they didn't include them, but probably because they thought it was overvalued. They're also trying to protect investors, right? Because the S&P 500, it's one of the biggest indexes, and a lot of people and a lot of pensions are invested in that. So they don't want to include companies where it's clear that they will lose 90% of value a month after inclusion, right? And so they try to be careful about that. So with Tesla, they waited a few quarters to see if also the price holds up or what the volatility really is. So this might be something that they would do with Strategy as well. We'll see if it's the same, then it would take 2 or 3 additional quarters before they get included. But if the price of Bitcoin and Strategy with it continue to appreciate, it makes them bigger and bigger. And the longer they wait, the more impactful it will be when they finally do get included.
Yeah, no, that's good to know, because exactly I heard that they took a couple of quarters, but I wasn't sure how many exactly. So I suspect that it could be a similar thing here now with Strategy, right?
Yeah, we will see what happens. The committee is meeting once a month to take decisions on those companies. The decision on Strategy would most likely happen in mid-August after their earnings report comes out. And the earliest time they could be included is then for the end of September. And if they're not included, then they would have to wait another quarter or two. So it would be end of December or end of March inclusion. Okay, so let's move to our next topic. Here we have an interesting slide showing Strategy's preferred shares. And you can see for Strike, Strive, and Stride, the notional value of their outstanding shares. You can see they were issued at a different point in time. And since their issuance gradually getting up in value in terms of the outstanding shares, now they have around $3.3 billion worth of it. This is just the beginning. It's currently not a very liquid market. They can issue around $50 million worth a week currently. And as they get bigger, this is expected to also get bigger, deeper liquidity, and more possibilities to issue those instruments. So this is an overview of the last few months. What we wanted to reiterate here specifically is what those preferred shares are doing. And for our new listeners, we'll show the next slide, which is something that we've shown before, but it's really the potential market that those preferred shares are targeting, which is the fixed income market. And here you see the overview of real estate, around 370 trillion worth, the bond market with 318 trillion, the money market 129 trillion, and the equities market with 135 trillion. And all of those are potential markets for those preferred shares, right? It's 100% of the bond market because the bond investors invest in bonds because they want to yield out of it. Around 40% of the real estate market, 25% of the money market, and 10% of the equity market that is held for dividends, right? So we see around 500 trillion addressable market for those preferred shares, and today they capture 3 billion of it. So still a lot of liquidity that they could potentially tap into.
Yeah, and that's, I think, why we see them being repriced the way that it happened, right? Because as all of these different buckets or investors that are tapping into different buckets start looking at what's happening with Strategy, then they realize that those instruments are probably worthwhile looking into and investing in, right? Especially looking at the yields that they currently have. And this is something that, again, Jeff Walton has mentioned, right? If you're looking at real estate, for example, you have all these additional risks like property risk, like there's a whole bunch of physical risks that come with real estate. And you have also like the whole management of property that you need to take into consideration and such things. And suddenly you just have this digital asset and the risks are a lot lower there, or there's different risks that are probably not as high as you would expect from a real estate component. And so suddenly this is actually way more valuable. And I think, again, the market still hasn't fully priced in those instruments based on all of this, right? If you start really digging into those different aspects and really looking at the kind of risk reward type of framework that you should have in mind when looking at it.
Yeah, so just to add on this slide, I think an interesting way to look at this is showing the total global asset value that we have in the world, right? All of the assets. And you can see that actual money is only around 10% of it. And the rest is spread across gold, equities, real estate, etc., right? And one way to look at it is that you have one part that is used as a store of value. If you think about basically all of the gold market or most of art and collectibles, people buy those as a store of value mostly. Then you have a portion that is actually utility. If you go into real estate, for example, people need to live somewhere. So if you buy a house to live in it, that's utility value that you get. And then the third bucket is fixed income. Staying in real estate, if you buy one house to live in it, that's utility. But if you buy 5 more to put them on Airbnb and getting income from that, then that's fixed income, right? So that's the 3 buckets: store of value, utility, and fixed income. And we already know, those that follow the Bitcoin story, that Bitcoin is disrupting the store of value aspect of this, right? Bitcoin is a lot better than gold for many reasons that we all know about: the divisibility, transportability, the decentralized fixed supply, etc. Bitcoin is also disrupting the art and collectibles market because of that, and could also go into the real estate part. But now, next to Bitcoin, thanks to those Bitcoin Treasury companies, and specifically the preferred shares from Strategy, you start attacking this from a different angle, which is the fixed income market. And that is, again, disrupting all of the bond market, some of the money market, some of the real estate, and some of the equity markets.
And what you can see here actually is, and that's probably the most fascinating thing, is if you look at the store of value aspects, then you're looking at mostly at a small portion, right, of the total addressable market. Whereas now, if you're attacking the fixed income, you're looking at basically the 2 biggest buckets, right? Like bonds with 318 trillion and 40% of real estate of 370 trillion. So this is now disrupting like the bigger assets or types of assets, if you will. So it makes it for a bigger disruption in general.
Yeah, exactly. Backed by the best store of value that is eating the other stores of values, right? Okay, so let's move right along to our next topic, which is something that we're putting up here a bit as a repetition, but also as a general observation of people we talk to about Bitcoin Treasury companies. It seems that there's still a bit of misconceptions about the differences between Bitcoin ETF and a Bitcoin Treasury company. This is supposed to help you understand and see the differences here with this table. So what we've put up here is, for a 10-year horizon, if you just want to invest in Bitcoin, this is the easiest part, right? And by the way, this is something that we haven't talked about a lot, but is recommended before hyping into Bitcoin treasury companies to first understand Bitcoin, to know what you hold, and maybe also invest in Bitcoin before diversifying into Bitcoin treasury companies, as this is really the savings vehicle in our opinion. But here for those purposes, if you invest into Bitcoin, you buy one Bitcoin today, it will remain one Bitcoin over the next 10 years. You don't have an MNAV, you don't have any yield on it. It's just Bitcoin, spot Bitcoin. Then if you compare that to a Bitcoin ETF, where you have, for example, on the BlackRock Bitcoin ETF, you have a fee of 0.25% a year. So if you invest into one Bitcoin today, in 10 years, you will have 0.97 Bitcoin, because every year you lose a bit. It's not thermodynamically sound, as a sailor would say. You lose energy by investing in those instruments, because those companies offering the ETFs, they take a little cut of it every year. And now you compare that to a Bitcoin treasury company. Here, as an example, a Bitcoin treasury company with an MNAV of 1 and a Bitcoin yield of 10%, there the target clearly is, if you invest one Bitcoin today, is that every year you get more Bitcoin out of it. That's the idea of additional Bitcoin per share, of Bitcoin yield. And this is the whole idea behind those companies, is you want to increase the Bitcoin that you hold by investing in them. And the whole trick is to find a company that makes this possible. This is now just in theory, but looking at 3 concrete examples with Semler, MSTR, and Metaplanet here on the table, you can see with their current MNAVs and their current BTC yields what this actually means, right? So looking at, for example, at Semler, if you sell one Bitcoin to buy Semler today, you would only end up with 0.74 Bitcoin, because their MNAV is above 1. So you're kind of losing that share. But if they can maintain their BTC yield that they're currently showing of around 20% per year, in year 3, you would be back at your 1 Bitcoin. And in 10 years, you would have 3.8 Bitcoin. And same story for MSTR, quite similar. And then on Metaplanet, it's quite interesting because the MNAV is very high, over 5. So if you sell 1 Bitcoin to buy Metaplanet today, you end up with only 0.2 Bitcoin. But they have a BTC yield of 300% that they're currently showing. So with this, in year 3, you would end up with 3 Bitcoin anyway, if their growth continues like that. Now, how long can they keep this up? What are the risks behind it? That you need to analyze and understand as well, because as you can see now, year 10, 49,000 Bitcoin probably doesn't make sense, and they won't be able to hold up those super high BTC yields as they grow bigger and stronger. Yeah, this is the main message behind this, is to show you the difference between a Bitcoin ETF and a Bitcoin treasury company. Now, this doesn't say anything about risks, right? Because obviously with higher returns, you also take higher risks, and those companies can go belly up, they can get liquidated, and you have nothing at the end, right? So this doesn't show anything about that.
Yeah, that's a really good point. I think the risk aspect is something that people, when trying to invest in those Bitcoin treasury companies, or looking at the different exposures of Bitcoin, need to think about, right? Have a proper mental framework of the risks. So which risks are you exchanging? Which risks are more present with which different type of exposure that you have, right? So this is something that we haven't addressed, and that's something that we will show in the next slide, right? But let's say you take spot Bitcoin, then you don't have all these counterparty risks that you would have with Semler, MSTR, or Metaplanet, right? And obviously there's not only the risks that you take on the time frame, but there's also different risks that are appearing or throughout the time span of an investment that you would take as well. So it's very important to have a look at all of this and make sure that you invest in what's adequate to your risk profile and what you're looking for, right? And that's why it's also important for you to do the research on these specific companies or different types of investment vehicles that you're taking Bitcoin exposure.
Yes, absolutely agree. And to reiterate, what you're doing when you're buying a Bitcoin treasury company is you say you're willing to pay them a premium because most of the time they trade at an MNAV above 1 and lose, in that sense, part of the Bitcoin that you could have by buying Bitcoin directly. But those companies can do things that you as a private individual cannot do. They have operative cash flows in some examples. In other examples, they can just borrow at super attractive rates, like those convertible bonds that they issue at 0%. You can't do that as a private individual. You can't issue shares at the market. You can't issue other financial instruments like preferred shares. You can't acquire companies that maybe are trading below 1 MNAV and are attractive in that way, right? So those publicly traded companies just have the ability to create financial engineering and instruments that you can't, and that's why you invest in them, because you think that they will be able to get you an attractive Bitcoin yield.
Yeah, and that's why Saylor mentions in some of his talks how a company is the most powerful engine that was created by mankind, right? Because suddenly you have the power of a few people or a bunch of people that gather together to create those engines and be able to borrow at low rates and so on, right?
Okay, now we can move to the next topic. You mentioned it already on the risks of Bitcoin treasury companies, and you have some thoughts about those.
So I think the two topics aren't completely separate, right? I think they kind of go together because when you try to get exposure, as mentioned, you should always try to think in terms of risks. What are you getting into and what are you giving up, right? So maybe the first thought that I would start with in general is when you look at those Bitcoin treasury companies, you should always keep in mind that the goal is to acquire more Bitcoin. And that's probably something that we need to reiterate a bit more in general because it gets lost in all of the euphoria. And especially we can feel the momentum, I think, building up. People are going to start seeing some gains. And at least in my framework, my idea is as soon as I see gains, I don't want to go back into US dollars or other fiat currencies because they're losing value, right? So my idea of taking profits is going back into Bitcoin, cold storage. So obviously we'll see what happens during the rest of the bull run. At some point, I'll start trimming some investments and putting them back into Bitcoin cold storage. That said, I think there's a bunch of different risks that we need to mention in terms of Bitcoin treasury companies, right? When you have your Bitcoin on cold storage, then you obviously have some risk on your side as well. You need to store your private keys properly, make sure that you have adequate security, that you need to be careful on, I don't know, cybersecurity, phishing, and things like this. So there is also risk. It's not risk-free. But then when you go into Bitcoin treasury companies, well, you're giving up the self-custody aspect, right? And then you're having different types of risks as well. And maybe here in this slide, we present a few of them, at least the ones that we have thought of. There are more. We'll probably add them as we get to know them as well, right? Because this is a fairly new phenomenon. So probably not everything is in a proper framework as of now. Maybe let's get started with the list of risks that we have here. First, we have the market risk, right? So that's basically the volatility based on fiat US dollars, for example. I think most of the viewers understand that. Then we framed or we called a second risk the premium risk. And this is more an angle from a Bitcoin perspective, right? So especially looking at the valuations on an MNAV basis, as time goes by, probably the MNAV valuation should be more consistent. Right now, it's very hard to value those Bitcoin treasury companies, right? Because it's a new phenomenon. So you can see MNAVs all over the place. And so maybe over time that this should be decreased as well. Then we have the counterparty risk, which is something more in terms of the strategy of the companies, right? For example, Strategy has Michael Saylor, Fong Li, and their leadership that are very convicted on the Bitcoin thesis. But who knows if they leave, what happens with the company, right? There might be a change in strategy, for example, and that can be obviously a risk. Then we have government confiscation risk. We've seen that in the past in terms of the Executive Order 6102 in 1933 in the US, when there was this executive order which basically confiscated the gold out of the citizens' hands. This could potentially happen as well to a company, right? So this is something that you should keep in mind, although obviously right now probability of something like this happening is probably very low. And last but not least, custody risk. So this is just a cyber attack, issues with private keys, the same risk that you would have as a self-custody as well, by the way, to some extent, but here on a company level, always, in my opinion, very low. But yeah, Quentin, maybe you want to add something to these risks.
So I think you explained it very well. Maybe just to summarize on those risks. So market risks and premium risks is more something that is short term, and then in the long term, those risks are reduced. And then counterparty risk and government confiscation risk is the other way around, where it's low in the short term, but could potentially be bigger in the long term. That's why it's important to stay on it and stay informed about your investments. And I think especially to mention on the government confiscation risks, it seems like very far out there and very unlikely in the world we live in today. This can change. And if you look at history, you mentioned 1933 in the US, but anywhere you look in the world in the 20th century, there's not a lot of places where you would have been able to keep your gold if you were lucky enough to have some, right? There's numerous examples of governments confiscating it or not allowing access to it anymore in Europe specifically. So this is something that could come back, and that probably will come back in certain jurisdictions.
And I think this is a risk that isn't talked about enough, in my opinion, right? Because people think, oh, it's if it happens, it's probably going to be in such a long time, or at least it doesn't seem like it could happen in the short term. And I completely agree there, right? But at the end of the day, that's why you want to have your self-custody Bitcoin, right? Because there will be times, and depending where you live, actually, it could happen earlier in some jurisdiction than in others. And having the self-custody Bitcoin at the end gives you this self-sovereignty and be able to move with your wealth from one place to the other, right? And that's your superpower with Bitcoin. You can have the private keys in your head, and you can go anywhere and get all your wealth with you. Now, the moment that you switch those self-custody Bitcoins to buy those Bitcoin treasury companies, the Bitcoin are no longer with you, right? You only hold a paper saying that the company is good for this Bitcoin. But there are those risks that need really to be taken into consideration. And again, going back to what I said before, that's why you need to have also a proper execution plan when looking or investing into those Bitcoin treasury companies, and make sure to make those proper adjustments on your portfolio based on your risk profile.
Yeah, and I think this is important to add here is we talk about Bitcoin per share, or in the overview we showed before is how much Bitcoin would you have in each of those companies. But owning shares of a company doesn't give you the right to the underlying Bitcoin that they hold, right? This is purely a calculation based on their current treasuries, but you don't have a claim on this Bitcoin if things go south, right? So this is important to note. It's not yours. The company shares can go worthless. And we saw, especially with Strategy and the capital structure, that if you're an MSTR common stockholder, there's a lot of other instruments that have priority over you on the capital stack, and you're junior basically to all the others. So there are risks that are involved, and the Bitcoin per share is not a metric that you can count on like Bitcoin that you hold in cold storage.
Maybe worth to point out here as well is that in case of bankruptcy, even the most senior notes or preferred shares, they wouldn't get Bitcoin in exchange, right? The Bitcoin would be sold and the proceeds would be given to the holders, meaning that you only get fiat, you don't get the Bitcoin. So important to keep that in mind, I think, when looking at all of this, because I think there's again a lot of misconceptions what happens in case of bankruptcy, who has the right of the Bitcoin and who holds the Bitcoin. And it's important to know all of these details when going into Bitcoin treasury companies. And I think we should maybe elaborate a bit more throughout the future episodes as well, as we learn more on the different nuances of the different Bitcoin treasury companies as well.
Okay, this was another fully packed episode, and we'll leave it there for today. Move into final thoughts. Yves, you want to start?
Yeah, just to piggyback on what we were just saying, I think the main thing as we enter this next leg up, or at least as we feel like we're getting into this next leg up, it's important to keep in mind a proper mental picture of how you want to adjust your portfolio, right? And here, just maybe to reiterate, so these Bitcoin treasury companies are arbitraging the fiat markets deficiencies in their favor to accumulate more Bitcoin. But this is only through there's going to be a window of opportunity for this, right? So we don't know, probably it's going to be 1, 2, 3, 4 decades of this. And as this goes along, it's important to take profits along the way. So that's the only last message from my end on this one.
Okay, from my side, I'll just get back to the news of the week with the strategy. And I think what the information that we got on Monday really shows the strength of strategy, at least currently, that they have. And it really surprised us positively. Just to reiterate, they issued dividends for a full quarter by hitting the ATM for half a day, which means that for a whole year of dividends, they would have to use the common stock ATM for 2 days currently. And it just shows how strongly positioned they are. Some of the dividends they pay, it looks like it goes right back into their preferreds. So they are able to invest it right back into Bitcoin, which is very interesting as well. Yeah, it's just a stock that I think now it's around 95 biggest company in the US. It is the 14th largest traded company in the US. So you see there's a lot of liquidity, and they are able to issue more shares without impacting the price, and able to pay all of their dividends. And it looks like this is the way they're going into the future. And as we saw, the opportunities are endless with the bond market and other fixed income markets that they can tap into. So it will be interesting to see their evolution, and also the price evolution of those preferreds that are only going up and to the right for now. And let's see how it keeps going.
All right, then see you on the next one. Cheers.
Bye-bye, everybody. See you next time.
How many chairs are you sitting on right now?